Good morning, channel members. In today's video, I want to go over a play that we've been in on this channel for quite a while, and a lot of us are up 100, 200% over the last month. The play is going to be PayPal, ticker symbol PYPL. Whether you bought options a month ago, like myself, and you're up 200%, or you want to just get into it, possibly, or you're looking for an exit strategy, or maybe you don't want to do an options play and you rather just buy shares of stock. This is going to be a really good video for you because I'm going to break down the thesis of PayPal. I really want to give all channel members their $3 value as best as I possibly can. Thank you so much for this cup of coffee. Before I go any further, I do have to make a disclaimer, and I want you to actually listen to this disclaimer because it's a serious disclaimer. I'm not a financial advisor. I'm not your father. I'm not your mother. This is purely entertainment and education. What you get out of this should only be information for you to do your own research. A lot of the plays I get is actually Jesse Dow's plays. If you guys don't follow Jesse Dow, I'm going to leave a link to his Twitter down below. I've been following him since he had under 500 followers. Now he has 20,000 strong. He's an absolute assassin. But at the end of the day, I do my due diligence on his plays. If it's something I don't like and I don't follow him in all plays, I make the decision one way or the other. Unlike a lot of people that are following him, I'm actually learning his strategies and technical analysis, which I'll go over today as well. But I also do my own research of connecting the dots. It's very important that you don't listen to anybody, including myself, and you do your own due diligence. The point of this channel, the point of the channel membership is not for stock picks, because that's not what I'm doing here. The point is to build a community, hopefully a bigger community than we have now, where we can all bounce off ideas of each other in the future once this community does grow. I have a lot of big plans. Thankfully, it is growing. We have around 40, 45 channel members, which I never thought we were going to have more than 4. And I want to make sure that you get value out of channel membership. So I don't just tell you, hey, this is a play that I'm doing, but I want you to understand the thesis of why I am doing the play. I'm not just going to do a play for the F of it. Yes, sometimes, but for the most part, there's a reason, a backbone why I do a certain play. And this is what I'm going to try to explain right now. And even if you get everything correct, you can still get it wrong. Technical analysis, fundamentals, connecting the dots, these are all just tools that should be in your tool shed, but they're only as sharp and as useful as you make them. So I highly encourage everybody to take everything that I'm saying today and do your own research and go further with this, because at the end of the day, it's all about that. Trying to be right 51% of the time, having the edge like a casino. We cannot get them all right, but we got to give ourselves the best chances of getting things right. And even if you get everything right, shit happens, like a COVID, like a war in Ukraine, right? It happens, and that completely destroys and offsets all theses. So let me get right into PayPal. So the current price of PayPal is around $72 a share. The thesis was that in around May, PayPal bottomed out. That was the thesis. And based on a lot of technical analysis, which I'll go over in just a moment, there was a reversal of a downward trend to an upward trend. And a lot of us were able to buy at a very, very low price. I think I started getting in at low $60. Well, then you're going to say, well, Adam, if the price today is low $70, the price essentially went up, $10. So the price went up only around 20% or so on the stock price since you got in. How are you up 200%? Well, options plays do not trade one-to-one to stock plays on the way up or down. You see, if the stock is up 10%, your options are going to be up 100%. But if the stock is down, let's say 5%, your options play is going to be down 25%, right? It's not exactly one-to-one. I'm giving you arbitrary numbers. They're not exact because it all depends on when you bought, when's your expiration, when's your strike, so on and so forth. PayPal was one of the best opportunities in fintech in terms of bang for your buck, where you have a multi-bagger if this stock goes up. The whole thesis of this play is that the price of PayPal is going to reach its 50% all-time high, which is right around $150. And if you got in when I got in or started talking about this, you're looking at a 20 to 30x return approximately on your investment. Even today, getting into PayPal, if PayPal goes to $150, you still have a 5 to 8x on your money. You understand how this works? So if you're over 2x on your money and there's another 7, 8x to grow, well, the people that got in are 20 plus x on their money, depending on when you got in, right? The difference of 50 cents on the play is a huge difference in options. On Friday, I ended up buying more options. So the options play, if anybody doesn't know, is January 2025, $145 strike price. That's the long call options, the leap options. And the leap option is a option play over 12 months. Because those options play became expensive, but that doesn't mean that there's no room to grow, right? Would anybody complain if the stock goes up from $75 or $72 to $148 and instead of making 1x on your money, you end up making 4 or 5x on your money? No, everyone's going to be happy if that happens. Huge if. Well, we ended up getting into short-term plays as well. The short-term play is October 2023. Strike price is $115. This is a short-term play specifically for earnings. Earnings is coming out August 2nd. We believe that earnings is going to be good for fintech in general. This includes PayPal, but also Robinhood and SoFi and Square, Marqeta, things like that. So we're playing the short-term options plays for earnings. And although earnings is going to be August 7th, August 2nd, we like to have a call option a little bit longer because of the Greeks. The closer you are to expiration date, the more the value loses due to the premium getting reduced. So keep that in mind. That's why the play is for October 2023 and not like September 2023 or August 2023, right? Now, there's a couple of theories here. The current PE, price to earnings ratio, is 30, while the forward PE is 14.75. A PE is a premium that Wall Street gives or investors give, both retail and institutional, to your specific stock. A regular PE is 12 months trailing, while a forward PE is 12 months in advance. A forward PE is a very speculative measure, but they're saying based on the growth of the company, what's the price to earnings based on the next 12 months, as opposed to the price to earnings based on the last 12 months. Now, the interesting thing about this PE is the historic PE. So there's a few ways to play PayPal. We're saying that PayPal is undervalued compared to where it was before, but it's overperforming where it was before. Let me explain it. I know a lot of this stuff might sound Chinese, but stick with me and ask questions. Please ask questions so I can make more videos for my channel members who give me $3 a month. I appreciate it. The historic PE, this is over the last 8 years, was 48. If you don't understand what a PE is, that's fine. Just understand that's the premium that's given to your share price. That's the multiple of your earnings. If the average, the historic was 48, and right now we have a 30, this is a discount of around 35, 40%. That means from historic times, our PE is severely undervalued, which means just based on that, the price of PayPal should go up. Keyword is should. Now I want to go back for you guys to understand a few things. Right now, our earnings per share, our PE is based on $2.40 earnings per share. That's how much we make per every single share. If you go back to 2016 and 2017, in 2016 through 17, our PE was 32, 35, 34, 36, 43, and then in 2017, it started hitting 50 and 50. At the time, remember, right now we have a 30 PE. Our earnings per share is $2.40, which means the multiple we're getting is 30. However, we're earning $2.40 per share. Those numbers I just gave you, 32, 35, 34, 36, 43, 50, 50, we were earning 112, 114, 116, 118, 125, 129, 142, or under 50% of our earnings per share right now, right? Except for the last time. The share prices of those was 36.50, 40.97, 39.47, 43, 53, 64, and 73. That at the end of 2017, our share price was where it is right now, 73. Our current share price is right around 72 and change. However, back then our earnings per share was 142. Right now we're doing 242. And our PE back then was 50. And right now our PE is 30. Based on the numbers that I'm saying right now, the multiple that we're getting today is disrespectful compared to the multiple that we used to get. And we're being valued today the same way our company was valued in 2017, except we are earning nearly double earning per share than we were in 2017. I know it sounds a little bit weird when I say it, but just remember that. We are being given the same multiple that we were given in early 2017. However, our company is bringing in a lot more money. The revenue in 2016 was 11 billion. The revenue in 2017 was 13 billion. The revenue in just one quarter of 2023 was 7 billion. If you take the estimated growth for the next 3 quarters of this year, we're supposed to make 29.5 billion. So our company's valuation today is where it was back in 2017, except in 2017, we were making $13 billion for the year. And in 2023, we're estimated to make 29.5 billion. Just listen to that. More than twice we're going to make more in revenue. And earnings per share is $2.40, while the earnings per share before was $1.42. So now you're comparing yourself today in 2023 to the way you were around 6 years ago in 2017. And you're like, hold on, Adam, why is our multiple so low if we're making so much more revenue and earnings per share than we did in 2017? And now you have the aha moment of, oh shit, maybe there's really something here in PayPal. So this is a connect the dot moment. This is what I like to look at when I'm investing in a company. Now let's break down what PayPal exactly is, and I'll try to explain to you why PayPal was shitted on. PayPal has branded and unbranded. Branded is actual PayPal. Unbranded is they give your business PayPal, but you brand it. You don't have any fucking clue how many companies use PayPal Braintree, which is their unbranded services, which I'll show you in just a moment. You will be shocked at the companies that use Braintree. And you're literally using PayPal technology every single day with these mega companies. For example, Airbnb. That's just one. You guys will be shocked at the names. So they use PayPal technology, but you don't know you're actually using PayPal. PayPal has a lot of growth. The PayPal actually branded is growing by 6.5%, and the unbranded is growing by 30%. The problem is, unbranded is a lot less profitable than branded, and that's the problem. So the profit margins got reduced in the last earnings because the unbranded is growing by far more than the branded. However, the branded is still growing by 6.5%. Now, PayPal says one thing that we're doing is we're gaining a lot of information, and PayPal is really into artificial intelligence. I don't know what platform they use. I don't think it's Palantir. I don't know who they use, but they're saying that the unbranded business is huge in growth for them, especially in global growth, because they have a lot of information that they could comb through and process through artificial intelligence to give the consumer and to give the businesses a better experience, therefore growing PayPal as a whole in the future. That's their shtick. Now, I don't think it's bullshit. I don't know if they'll be able to deliver or not, but it doesn't mean they won't or will. I'm just giving you guys the thesis here. Of the total transactions that PayPal processes, 30% is done through PayPal branded, 30% is done through PayPal unbranded, 26% is done through Venmo, and 14% is done through others. So you have the legacy PayPal, and then you have PayPal unbranded that's growing, and most importantly, you have PayPal Venmo, which is like the fun PayPal. And Venmo caters to all of the younger crowd. Do you know that Venmo processes more payments in total value than Zelle that's being used by all banks? There's a hidden liner that maybe in the next crypto summer that's coming, and I know you guys don't love crypto and it's fine, but let's just, call a spade a spade. Cash App revenue and transactions come a lot from crypto, significantly more than Venmo. Venmo was able to bring in revenue, and a lot of that revenue is not coming from crypto. I believe like 14 or 18% off the top of my head, which means there's a huge growth opportunity for Venmo and PayPal by extension when there's going to be another bump in crypto, which is going to happen within the next 12 months. Don't know when. Within this next 12 months, my opinion, of course. That's going to help Venmo, PayPal to grow a lot. So now I connected the dots. This is the footing foundations. This is the thesis of PayPal. I'm going to go over to my computer and I'm going to give you some technical analysis, and everything on the technical analysis looks good right now. We're about to have earnings. Everyone is also nervous about the CEO leaving. PayPal CEO is leaving. They need to mention who's going to be successor. They need to appoint a successor. So that's also why people are very, very nervous of how PayPal is going to go forward. One of the good things about PayPal is they buy back around $5 billion worth of shares every year. So they don't give you a dividend, but they literally buy back shares because they have so much money. They are a cash cow, and this means something. PayPal is not going to go out of business. PayPal at $72. There's room to grow at $75 is the next, uptick. Then there's an uptick at $77 and an uptick at $79. If earnings comes in and it's good, and that's a huge if, because again, there's so much information that we don't know, PayPal can actually take off. And those would be the next levels of resistance. The next level of bring us right to that $80 mark. But remember, if we go from 72 to 80, that's around a 10% growth. Your options is not going to grow 10%. Your options are going to grow multiple of that 10%. That's why options are so strong. However, if the price goes down, your options are going to be decreased multiple levels. In the comments, it's very important that you guys let me know if this makes sense, what I'm saying, because I need to know what type of videos I'm making for you and how I break this down, because it's very important for me that you guys get your money's worth, the $3 a month. I want you guys to be flooded with information so that when somebody asks, you're going to say, yeah, Adam gives us a lot of information. So I want to make sure that my flow and my presentation and my outreach to you guys is correct, and I give you guys the most value. So please, in the comments, let me know if this is helpful for you or not. Let's go over to the computer and I'm going to give you some technical analysis. Guys, I want to apologize. I literally just came home and putting my kids to sleep, but I really wanted to finish this video tonight. I know it's like a 40-minute video before tomorrow's market open, so you guys can make whatever plays you want with your options play. So right now I'm going to go into technical analysis when it comes to PayPal, and I want to show you where I got my price targets of $75, $77, $79, and past $80. So the very first thing that I want to do is go over price movements. This is the current price movement of PayPal. It's at $72.99. Right here is the 200-day moving average. Right here is the 100-day moving average. Right here is the 20-day moving average. And right here is the 50-day moving average. You want to be above the 50. You want to be above the 20. You want to be above the 100. And you're very, very close to the 200, which is right here, right? We just fell below the 200. So that's actually all very, very good indicators. And here goes our triangle right here. This line right here, this red line right here, this is our triangle right here, okay? So if you want to redo the triangle, what we could do is we could go like this. This is going to be our new triangle right here. And the bottom portion of our triangle remains the same. So right around here is going to be our support. This is going to be our support right here. Boom, 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 boom. So our support for this week is going to be right around the $75 mark and down to right around the $70 mark. And right now we're at the $72.90. Now, what's going to happen is if we can break past the 75, we're then going to go to the 77 and the 79. Where do you get that? That's going to be our last levels of resistance back in April of 2023. And then if you go before that one, we're going to be at March of 2023. We can go more and more back if we'd like, but I think these are very, very strong support levels right here. Now let's look at the RSI. The RSI is above the RSI average. Let's just adjust this. We went up here, and this line is going to be here. So right now we have a very nice uptrend for the RSI. We're right in that upper level of 60s. And basically, you want your RSI to be above 70. It starts to be oversold. So right now we're under that 70, which means we have room to grow to the 70. And as long as our RSI, the purple line, is above the yellow line, this is also a bullish signal. Guys, this is going to be the MACD line. There's two very strong bullish indicators. The first bullish indicator is the blue line is above the orange line. So that means that the MACD crosses the signal line. This is a bullish signal. The second bullish signal is that the MACD is above the 0-0 line. So this line right here is 0-0 line. And that means that if it's going up or down the price, and MACD is the line above this. This is actually a very good bullish signal. Look, guys, at the end of the day, nobody knows what's going to happen. We can't see in a crystal ball for the future. In terms of technical analysis, in terms of where the price is compared to moving averages, we're in good shape. In terms of where the RSI is in general and the RSI versus the RSI moving average, we're in good shape. In terms of the MACD in correlation to the 0 line and the signal line, we're in good shape. In terms of everything that I just mentioned, it's all pointing up. That's also in good shape. With PayPal, because it got hit so much, there are so many resistance levels, or let's say breakout levels, that we could look forward to. For me, I'm looking forward to right around that $80 range, just south of $80, and then we're going to reassess everything. This entire thesis, the footing, foundations, fundamentals, technical analysis, can all be broken at earnings. If we don't perform, we don't perform. However, it seems like we were shitted on for so long, and some really good piece of news can absolutely take us off. That's the key for the technicals and the fundamentals. You still need to deliver, but the thing is, you're stacking the deck in your favor, that if you actually do deliver, the price is set to take off, as opposed to the price just goes up a little bit. It's literally ready for takeoff. You just need that really good piece of news. And that's where we are with PayPal. As with always and everything, please do your own research. It doesn't mean that this is going to go to the moon, but do your own research. And it just means that, in my opinion, for myself, with my due diligence that I'm showing and sharing with you guys, my channel members, this is set to take off. Now, we don't care what happens in 2025. We just care what's going to happen in 23 and 24. We care about PayPal for the next 2 or 3 earnings after this earnings right here. And that's probably when we're going to be exiting our position, which we'll talk about in a completely different video. Basically, if PayPal can go to $100, $110, $120, $130, $140, $150, that is going to be exit points, because at that point, everybody who's been in this position should be at least triple digits up in their plays. Some of us are going to be even more than triple digits up, maybe quadruple digits up in their plays. If you have any questions, please, please, please feel free to ask me. If you guys want to join the conversation, please, in the comments, let's join the conversation. Also, let me know what your Twitter handle is, because I want to follow all channel members. Thank you very, very much. I'm sorry this video came late. but I promised you a video today and I delivered on the video. Thank you and have a great day.